is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Of course, Monday it was a holiday, so it's Tuesday through Friday this week on market days. And thank you to our great hosts. Starting off, so John leads off, gives it to Steve. I take over. What is today? Wednesday? Whoa. Already Wednesday, you got Larry Pesavento coming after me. You got Dave White. You got Daryl Martin. You got Tom O'Brien, and then Tom does his show with Elliot 6 to 7. Wow, what a busy day we've got. As Ellen in the engineer's booth says, Prince Spaghetti Day, absolutely. So that's interesting. I had spaghetti yesterday for the first time in ages. So let's go through the numbers. The Dow is at 17,125, missed by 3 points, making an all-time high for leg D. It'll get there. The diamonds got there. We'll go through all this in a moment. The E-minis right now in leg E, up 425 at 2004. Made a right arm extension or maybe a rogue wave, we're not sure yet. Spiked this morning to 2011. That's the all-time high. Peak E/B. We won't know for a little while whether or not it's the former or the latter. But most importantly, what we're looking at is that the S&P is right now up 317 at 2005, having made an all-time high. Let me just do this with the charts as we do that. Look at this. Here's the Dow. Just missed it. Peak C1, peak C2. So in a sense, you can consider that it has not in reality made a leg D, but in all practicality, it's real close. We'll see what happens. The day's young. I suspect there will be a high into the 17,154 area or higher. The 120-minute chart had a spike up. So far as holding it. This is going to be really important. How does the Dow 120-minute chart hold? Does it close above 17,153.80 today, which would be a big positive. Now, this is very interesting. We've got the QQQ series in leg C. The pattern that I showed my subscribers over the weekend, well, for a little while now, but certainly over the weekend I did it again, where you've got an extension in the Fibonacci that could take it to the 300% extension to 100.50s. Today hit 100.34. Missed by 16 cents. But most importantly, this is leg C. I believe that we should get a D. The MACD is still good. The stochastic's holding at 95%. That's my impression at this particular point. Got an F/D. So both of them say that in the 120-minute chart, we in fact could have made some kind of a short-term top, and we're going to be watching that very closely. In the weekly chart, you've gone to the upper end of that inside track resistance. F/C in the weekly chart. Oh, talking about that, let me just mention, this is for me. This is going to be one of the perfect times to be able to show and teach my all-day webinar right in the front page of TFNN. Master Trader Series with Basil Chapman. This is the Chapman Wave methodology. This is a level 1. We will be going into some of level 2, but mostly it's to show you the structure, how you can enter trades, how you can exit trades, how you can add to the trades, what the lettering, how the lettering works. What happens when you get to a peak D? That's always the difficulty. The fourth highest peak, that's the objective. But once you get there, then what happens? Just a bunch of things. And timing-wise, you couldn't ask for a more perfect time. This coming week, a week from Friday, September the 12th, all day, 8 hours, and it's going to be every aspect of this core initial phase. I will tell you, if you've already done a lot of work with the Chapman Wave and you want to advance a little bit more, I will take questions, even if it's slightly higher level. Why? Because the simplicity of going from the lowest, most identifiable trough to the next peak and the next peak and the next peak. 4 peaks takes you to peak D. That, in essence, is just such an important aspect to the Chapman Wave. Let me just show you something here. Look, we're waiting for leg D. Will it come? We don't know. Look how many times you've got your peak Ds right there in the 120-minute chart. When you go to the different time frames, that's going to help. I want to teach how you can use shorter time frames. If you're an intraday trader, I'll show you how you can use those time frames to go from one particular position that might have started off short term, but if your next higher time frame that you're looking at is only in leg C, and you've already got to a D or an E in the shorter one, it says you might want to wait. You might want to take something off and then add back, expecting that after leg C, you'll get a peak C and then leg D. Those are all the aspects. How, in my opening call, that's my daily newsletter, you'll get that free for a month. That's 128 bargain right there. If you're using your Tiger dollars, this is an unbelievable deal. So now let me go through these things and show you something here. The GCZ 114 shows you that peak E right there, that peak E in the gold on the 28th of August at 10 o'clock in the morning, plop. You pull back under I'm going to teach you how to use these moving averages. The 200-period moving average, the 9-period moving average. Look at that resistance. Look how it's repelled the line to the downside instead of propelling it to the upside as it had before. Look at this right here in the daily. Goes to peak E, a D, then an E, and then an F. But why did I only put the down arrow right there on the 10th of July at 17:15? That's 5:15 in the afternoon. Why? Because that's the only time that the MACD crossed negative and the stochastic was giving a failing a technical indication. So you've gone to a leg E, maybe a trough E, but so far gold looks like it could bounce, but you've got to be a little careful here. I still do not see strength in the daily chart enough to say this is a good time to enter it along. Look at the dollar, DXY, and gold right now is having taken a big hit yesterday. It's up 3 at 12.88. Dollar is in leg E, and this is going to be very interesting. Why? Because the dollar itself, the dollar index, that is, made a peak D. Remember how many times I'm talking about this peak D? Well, it's 83.06 on the 1st of September at 1:15. It made a peak D and it's been pulling back. But it's a very mild pullback, and so far it says it's at 82.89, down 11 cents. 82.62 is going to be very important to hold. If it doesn't, somewhere between 82 and 62 and 82.42, it's going to be really important to watch how that holds, and we'll be watching gold to see if it bounces in a counterpoint move. But in the meantime, dollar still showing tremendous strength, especially in the weekly and even the monthly charts. Let's go on to the bonds. TLT, this is the Lehman 20-year T-bond fund, made a G/C in the daily chart at 119.43, trading right now at 116.67, almost 3 points lower. Now it's going to be very important. Is that weekly chart making a G or a B? G is negative. B is very positive. Well, I hate to be fuzzy, but I'm using the daily incrementally to tell me whether or not we've got some kind of a top here in the monthly chart, especially when the beginning of the month starts with a gap up or a gap down. You got to watch that and moderate that really closely. You got to be looking at it with askance. You got to say, hey, this is now. In bonds, you often get island reversals, but I'm watching this island reversal in the TLT closely. The MACD is at 75%. Sorry, the MACD's crossed negative, and the stochastics is 75%. The price is trying to hold. If the price closes under 115.57, the low of the 20th, that says, uh-oh, be really careful, because that weekly chart could be impacted, as the 9-period moving average is at 116 and 11/30 seconds. So I did the darn. No, let's go to the euro. The EUR/USD is trying its very best, and in leg, sorry, it looks like it could be trough G/C in the daily chart. Going to be watching this closely, because there's a chance that that the euro-dollar currency pair could have a bounce, but it'll only have a decent bounce if it can close decisively over 1.317, the 9-period moving average, close above it, but it's going to close above it 2 out of 3 sessions, preferably trying for 1.322. So that's that. Now let me just go back to what I want you to talk about, and that is, this is so important. Look, I had a question yesterday, a very good question. I discussed it. I didn't 100% complete it other than to say that invariably at all-time highs, you will get at least the Dow and the other indexes going to leg D minimum. Can one of them fail? And what I'd say is only in a rare instance when you've got the Chapman wave stalk leg formation. Is that a possibility? Well, there was a Chapman wave stalk leg formation. It's done. This is a brand new move, and what's important about this is that the Dow is going to a peak C. I could call the C1, and as I did in the other chart that I showed, same Dow chart of the daily, except I have different moving averages and trend lines. And what I had drawn for my subscribers was this particular pattern. I've had it for a little while, that there should be a push into that oval pattern. And that oval pattern says somewhere at about 17,160, you should get your leg D top. Will that be? Well, today's high is 17,151.89. That is less than 2 points away from the all-time high. I'm suspecting that somehow or other we will get that pop to the upside to get leg D. But what's really important at this particular point is to say, now let's go through everything together. And this is going to be very important. Let me quickly check calls. No calls right now. That's okay. We'll take calls a little later on. Look, the Dow. Missed it by 2 points, but really close. V-shaped pattern. This is a little bit messy. I have a different chart that I look at, which is a little clearer. I'll just open it up. V-shaped pattern in the weekly, and leg. This is peak E. Sorry, leg E, and it will be peak E if there's no new all-time high this month, the whole month of September. So call it leg E for now. And look what's happened. SPX.X. This is using the Chapman wave methodology that I'm going to teach a week from Friday. And it is so nice because it can be so clear majority of times. Sometimes a little fuzzy, obviously. Nothing can be perfect. But look at this falling X formation that broke out 1-to-1 to the upside. It's already gone there in the S&P. The S&P is going to 2009.28, the cash. The weekly chart has gone from 1991.39 at peak F. Let me just double check that. I think I made a change. A, that's not a B, is it? Oh. I think I'm behind. Oh, here's a problem. 1883.57, 1883.97. Right, that is B. So that's B, C, D. And let me just double check. 1902.17, 1901. That is D, and that's E, and that's F. So this is G/C in the weekly S&P. And there's the break coming up. So I'm going to go through these different indexes to show you that at this particular point, we are missing just a couple of sectors and one index, and we'll be right back for those PTs.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So I had a couple of questions, but I'm going to go through those indexes and hope I remember those questions before we're out of time. So let's just do this again. So we've got the Dow. It's really close to D. And I suspect it's going to make a D, even though the diamonds have done that. If you look at the QQQ series, it's in leg C. It hit exactly that apex that I was looking at, and it should make a little U-turn right here, and there should be enough strength to get that requisite leg D, because the MACD and stochastic are still very strong, but starting to turn down. One of my indicators says now you've got to start being a little careful to the upside, because within the context of the shorter term chart, the 120-minute chart is your big clue, and that's saying getting a little tired. It's been struggling technically to confirm the highs. It hasn't really confirmed the highs. It's been negative, but there's just enough strength to maybe have a pullback for peak C maybe tomorrow. Then maybe Friday or Monday we make some kind of a top. Doesn't have to do that. We're in the area that says start being quite careful. Now let's just go to something else which is going to be very interesting. What I want you to do is to go to the IWM, because the questions I've had I'll go like this. IWM has been lagging, and it would be the first one to turn down. And my answer is that you would think so, but it doesn't necessarily hold, because this has been a rotational market correcting through the sectors that were the weakest, having the most strength when they rallied, and the sectors that were the strongest surprising because out of the blue they start to have weakness, and then that weakness continues. So I believe you're probably correct in thinking, here's that weekly chart, if it makes some kind of a doji close, and on Tuesday, next Tuesday, start to move lower, that's going to say, oh, okay, that could be it for the IWM, the Russell 2000 ETF iShares. What's really important is that so far I haven't had to change the peak F that I consider it to have made with the MACD and stochastic pulling back. But I can only tell you this, that if in September, all you need to do is go 1 penny above the 120.97 all-time high, and that I have to then consider to be leg C, and that's very positive because it will say that the monthly might pull back, but you're going to go probably to a leg D. So this is a very important moment for the IWM. I'm just going to give you parameters. A close above 118.15. Let's see, 118 today was the high. It was 117.80. Yeah, a close above 180 to 118.50 to 118.75 resistance would be very positive, at least in the shorter term, and extend the run a little longer. A close, as I say, by next Tuesday, into underneath the 9-period moving average of 116.22, certainly 115.07, which is the 9-period moving average, that would be very negative. We'll see what happens. Meantime, this is a really important session because it's going to suggest that tops are made in a rotational way very often. Bottoms are made almost in unison. Within days of one another, you can get a climactic low, an emotional climactic low, and you will see many of the indices bottom at that particular point. Occasionally, like in October of 2002 to March of 2003, you will get something like the Dow on the SMH as the semiconductor index bottoming in October, and then when the bottom comes in the S&P and the other indices, as it did in March, some 6 months later, those particular indexes did not make new lows. They, in fact, held very well, and that was a very good sign. So IWM, possibly already having made a peak F already in the monthly chart back in July. Let me just give you the exact date. That was July. The weekly chart was July, the week of the 4th of July, at 120.97. And now you've had a pullback just under 110 and a rally to 116. So that's going to be something we have to note and watch really closely. Now there's something else that's going on. In the so that's the, I wanted to just look at the XMI, which is an index that I look at a lot over the year. Not every day, but when it's really important, I study this very closely. Why? Because the major market index, which is not really spoken about very often at all, in fact, I haven't even heard anyone speak about it, for me is a very important index because it has American Express, Boeing, DuPont, Dow Chemical, Disney, GE, Hewlett-Packard, IBM, Johnson & Johnson. Has defensive as well as cyclical stocks, XOM, Exxon, Walmart. So this, and Procter & Gamble. So this is very important. It failed to make that leg D. Now, this is going to be very important. I'll be right back straight after this break, and we'll talk about it. We'll put into a relationship of what we're going to do during...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, let's continue with the sword. But I just wanted to say I had a question about RGEN, Repligen. This is not REGN. This is Regeneron, this is Repligen core. And in the daily chart, the monthly chart looks like it might kind of be topping there. The weekly chart certainly says that. And the daily chart says that H pattern that went to an A and then a B minus, this is something to watch. And I'm just going to say that this H, lowercase h, can go into an M pattern. And if by next week, early Monday or Tuesday, if it hasn't gone above 20.50s, 20.45 was the high, but 20.50s, that's a real problem. And I think that it's going to be making lower lows and lower highs. I'd be real careful. If you've bought it and you've made some money on it, keep taking something off. Keep your core position, but don't take a loss under any circumstance, because if this thing trades underneath 1884, that weekly chart gets even weaker. Then Merck, MRK was a question. Merck is in leg D. Look how I said weeks ago, I said this is going for a leg D. Right there, typed it in, and Merck, MRK trading at 60.64, just a tad off its all-time high, is at 60.64 in leg D. MACD is good, stochastic's good. Weekly chart, I have a question about that, whether this is F/B, but that rectangle formation that I drew has very determinedly broken out to new highs. So far, all I can say is that keep your core position. I probably would say to you, you might want to think about taking a little bit off to reward yourself if you've been long all this time. We've got someone in the den who's had this as a Chapman Wave monthly chart going to leg D for at least a year and a quarter, maybe a year and a half. But it's got the left side, right side peak E from 61.62 back in December of 2007, plunges down to 20.05 and then steadily makes its way to 2 buy modes. Leg D once, 48 round number high, pulls back. Merck then pulls back to the 9-period moving average and then treats that as it walks the 9 EMA and goes to leg D in, that's today, September of 2014, 3 months, extending the, oh, no, that could be there, right there. Okay, that it has another month to go to October to get to 61.62 left side right side price time match. So congratulations for holding. As I say, I would be taking a little bit off to reward myself, and but I try to keep the call because it's just been an absolute winner. Now let's go to questions that I had sent to me. The RUT index. So this is, I did the IWM. And the IWM is the Russell 2000 ETF, the iShares. But if you are looking at this with the RUT index itself, leg E in the daily, MACD is good, stochastics up at 90%. Doji candle leg A, gray A, because it's way under the previous high. So it's a retracement mode right now. And I do have an F. All you need is to go 1 penny above 1213.55. At 0.56, I have to not call that G. I'm probably going to have to call that monthly charts. You don't often get Gs. I'm going to have to call that G/C with a good chance that you had an instant restart. I can't believe how many instant restarts there have been in many of these charts over the past month. So, yeah. So it's acting very well. 1169 to 1164 is key support going into next week. Then the question I had was Goldman Sachs. Goldman Sachs. Sarah wants to know, can you chart them? Yeah, I got them charted right here. There it is. Oh, so many. You know, in the upcoming Chapman Wave intensive 8-hour, and it's archived. You can look at it as many times for the next month, and you get my newsletter free. Coming up on September the 12th, go to the front page of TFNN and check it out. We wanted to see leg Ds in these charts. Look at this. Leg D in Goldman Sachs trading at 180.25, up 48 cents, off the high of the day. 182.07 was the high of the day. Leg D in the weekly, and leg F has just started in the monthly. Now, this is going to be a really important F. I might have to call it /something B, but I'm calling it F for now. Now, what's really important about this is that when you're looking at Goldman Sachs, support is at 177 to 176. It's at 180 right now. If it takes that out next week by Wednesday of next week and closes under 175.89, I have to consider that this is going to impact negatively the XLF, which is in leg C. We are actually still along the XLF, trading at 23.47. I believe that this should still go to a leg D. Now, I'm going to take a moment to look at JP Morgan, to put them together here. JP Morgan, also an important stock in the XLF, the S&P Select Spider Trust, right here. So we go to the lowest, most obvious low bar, in this case 55.60. Yep, 55.60 is the low. Put an up arrow. I can do that because I know that we've gone to a couple of peaks. So that's A. That is B. I'll tell you right now what it is if you're listening on the radio, if you're not listening to it and able to see the charts. But if you're looking at Tiger TV, you should see these charts beautifully. Left one always is the daily. This is always the weekly. This is the monthly. And then I just grab the 120-minute chart, which is making A, B, C. And there should be another high. Okay, so what we're looking at here is that from the low bar in JP Morgan, trading at 59.78, up 11 cents, the low of the 5th of August at 55.60, shot up with a higher low the next day, made a higher high than the previous day at 56.69, and that starts leg A. Well, at 55.69 the very next day, you have a parallel high and then a lower high on the 12th of 56.55. So that makes a peak A. The moment you break 56.69, you go to 56.70, you're talking about leg B. and that becomes all leg B until you make a peak B, because at 57.50 on the 15th, the 16th, 18th, that's the 18th was the next session over the weekend, comes in at 57.43, just 7 cents lower, but it makes a peak. The moment you go above 57.50, you start leg C. That's how many words it takes to discuss, and look how easy it is just to look at it right here. So it's going C, C, leg C, leg C, leg C, and then out of the blue, 59.95 hit twice. On the 27th of August, turns around. The next day is 59.37. That makes peak C. The moment you go 1 penny above 59.95, that was today, you go to leg D. 60.37 was the high today. Now, that's the way you want to work it. So JP Morgan, doing everything you want. I'm just going to say, if you're looking for support levels, 59.16 to 58.78 are the moving average support levels. Also, that red line that's just crossed the black line. The black is the 9-period moving average. This is a shorter-term moving average. And it says, whoops, now you've got to be a little bit careful. But wait a minute. Look at the histogram, still very strong. So this says you should take a little while before you actually make a peak where you can put a down arrow, because you need the stochastic to go under 80% and the MACD to cross negatively. So far it's good action, but I'm watching it real closely because that whole 58 area is support. If it goes under 58 into the 57s, we're watching that weekly chart to see if it makes a peak D. Let's go to Alex in New York. Alex, how are you?
Okay, Basil. I don't know whether I missed you saying it or not, but did you refer to the IBB going to an all-time new high yesterday?
Yeah, I think I did. If I did mention it, it would have been to an all-time high because it made leg E in the daily. And in the monthly, it went above 275.40 in in August, and in September now, we've had 2 days with higher highs, so this extends the monthly chart. So the answer to your question is yes.
And you was saying that you were referring to many things look like they were having a restart. Would that include the IBB?
That's a very good question. So let me just put this into the context here, because we have some charts which are distinctly having restarts in their daily charts, and others have alternate wave counts. In this particular instance, I don't have any choice but to call this leg E, possibly making a peak E today. Having gone to the new recovery high, it would become an instant restart with a parallel wave, a potential instant restart with a parallel wave count of E/A. If, let's say, today confirms peak E, and all of a sudden tomorrow or Friday, you get a strong move up that takes it above 278.78. To be conservative, I'm going to call it F. But because there is a chance that we could get an instant restart, I'll call it, this is E/A, and any new high above yesterday's high will be F/B. Everything about the chart itself says that I have some very clear signals that I can follow. One is at 93% in the stochastic, the iShares NASDAQ Biotech ETF, trading down 55 cents today, has very strong support technically in the stochastic, and the MACD hasn't yet. It's just starting to narrow, but it's only flattening out now. It hasn't crossed, it hasn't turned down, and it's very far from crossing negative. It will cross negative, I'm absolutely sure, if the IBB suddenly takes on water and the price movement itself pulls back and it takes out 269 support between 271 and 268. That's going to be really important in my work based on not the daily, more the weekly chart. Because if we start to pull back, then all of a sudden that candle, that doji candle from the 22nd of August with a high of 268.60 and a low of 263.05 becomes a magnet. And one of the things about these inside track like a channel line. When you break above it and then you start to break down, you've got to be aware that you can come back and test the breakout level. And 263 is really important. Looking out for the month of September, that'll be very important. But in the meantime, I don't yet have a signal to say, other than me just to have a look at the 120-minute chart. Yeah, the 120-minute chart made a peak E, probably rather than a B. And at this particular point, the stochastic is trying to flatten out and the MACD is turning down. I don't have a signal. We'll see by the end of the day. And then what I will be doing is I'll be running all the different biotech stocks, that is biopharma stocks, Biogen IDEC, Amgen, and just see what the wave count is at the end of the day. Look, Amgen right now, I think this is a peak C in the daily. Oops, no. So this is A, B, yeah. This is a C in the daily for Amgen, still acting very well. Excuse me. So as a guild, let me go to Gilead Sciences, trading in E. It could be an F. This one could have recycled. So I'm going to be doing my homework tonight to see whether or not we're making some kind of, at least a shorter-term top in the IBB. What's your reading? Do you have a position?
I have a position. I never sold any on the dip. I actually added to the position.
Right.
I'm a long-term holder of IBB, and, you know, I see $300 as a place I'm thinking about.
So let me just go to that aspect right now. When I look at the monthly chart, now the monthly chart will be impacted by the daily and the weekly chart. But just looking at it as it is right at this moment with the IBB at 275.46, that pattern with a little U-shape, not a U, with a rather large U-shaped pattern is a pattern that I respect very much. In my CD introducing the Chapman Wave methodology, I have, I think it's chapter 17. Let me just have a look. I have this double top pattern. Yep, right there. This, no, it's not that. I want the drop bucket. Let me just see. I think it's chapter 22. This is a pattern that I look at very closely. Why? Because when it makes a top, especially if it's a longer term move, and then it retests that top, if it breaks it, I have to look at some to the upside. I have to look at some other factors. If it doesn't break it, it makes it a lot easier. But what's really important about this particular technique is that the way the MACD and the slow stochastic are acting and reacting is really important. And at this particular point, the MACD is making an M-shaped pattern, still good, but the slow stochastic is not anywhere close to where it was when it made the high back in February of this year. So I'm going to be looking at this really closely. Why? Because this has been the go-to area for fund managers, and the big move that we had down back in February into March and April was 22 or more %. That's the biggest decline it's had in ages. So the buying here, I have to look to see how the stocks have held. You want to hold on just a second as we go to the break?
Sure.
Okay, we'll be back. We'll be back straight after this with Alex in New York. The Dow's up 26, S&P's down.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're on with Alex in New York. We're looking at the IBB. Alex has had this fantastic position that he's held the IBB and added to it for a long time. He likes long-term plays, and that's fantastic. I'm looking at this, and I'm saying, when I look at Jazz, which is Jazz Pharmaceuticals, when I'm looking at Celgene, Gilead, Biotech, IDEC, sorry, and many of the others, everything about it says that they are becoming toppy, at least shorter term. But I think what I'm going to do is I'm going to hold off. Maybe Friday, maybe even Monday. I'll start looking at these, and I'll do so during my show, and we'll look at them individually, and I'll talk about the levels that I'm looking at. But there's a lot of information being imparted as we are looking at these today, especially with a bunch of them very close to recovery highs, but not all-time highs, like Jazz has made an all-time high back in February of this year at 176.60, traded down to 120, I think it was, 120.38, and now it's up at 161. So it's a very good recovery. So I'd like to see how we close, maybe getting into Friday. But Alex, I wouldn't even think of telling you to do anything else. You've had a fantastic play. So I'm going to be doing some work on it.
I didn't think I heard you mention it, but I would also mention Regeneron.
Yeah, I did that just a moment ago, Regeneron. I did do that.
Especially because of their new drug to lower LDL.
Yes, I've got a G/D in the daily, a D in the weekly, and a D in the monthly. Still technically looks very good. So some of them could survive, and they could keep the IBB up. So, Alex, thanks so much for calling. Congratulations, and we'll be looking at these over the next few days.
Okay, feel good, Basil.
Thank you very much. So, folks, what I want you to do is just as we're going to our final break, and then Larry Pesavento will be taking over, I want you to look. I had a question. Does the Chapman wave ever fail? Yes. Actually, I should say it rarely fails, but my interpretation of it can fail because there's a human part of it. But basically, it's amazing how many times these charts can do what they need to do. So answer is yes, but I fail more than the waveform itself. According to Tom DeMark, 13 up closes equals exhaustion. How can NDX QQQ go to leg D and leg E? How much more buying? Well, I don't know. I don't know how they can do that. Look at Apple, made a round number. Whoops. Was that Apple today? What made a round number high? Was it Tesla? Something made a round number. I thought I'd written it down. 228 on leg F/B in Tesla, down 2.42. I think we're getting close to some kind of a consolidation. And I'll talk more about it, and certainly my subscribers will know exactly what we plan to do. But in the meantime, let me just make it real easy. The VIX index, I always do this. The VIX index trading at 1244, up 19 cents. It might be making at a trough D that 11.24, just 20 cents away, $1.20 away, sorry. That's going to be key. And my suspicion is that the VIX finally is starting to do what we had discussed earlier, that the weekly chart is getting to a point where it's trying to make the 11s really important support, and that says maybe it won't go to the 10s before we have some kind of a turnaround. So let me just end with this because I want you to check out the front page of TFNN. If you want to learn about the Chapman wave methodology, if you want to learn about all these different techniques, about the waveform, about how you can use the structure as I did right over here to point to a leg D being made in that area, all these different techniques, how you can use the 9-period moving average, the MACD, the slow stochastic, please, a week from today, Friday, the 12th of September, I will be having my all-day webinar on the Chapman wave. So please consider it. And let me do one other thing here as we're about to go. Look at this chart of gold, silver, copper, platinum, and crude oil. Look, they're all failing that very long-term monthly chart support. I'll be back. We'll talk more about it tomorrow. Have a great day. Stay tuned for Larry Pesavento, and I'll be back tomorrow.